Hi there traders, I'm Matt Krupski here at Chartered Financial Services, here with a special report to talk about Bitcoin futures. Obviously there's been a lot in the news about Bitcoin lately. The price swings last week we saw were pretty wild, trading anywhere from $9,000 to then $12,000 per Bitcoin over the weekend. And the recent announcement on Friday that the CME has cleared their regulatory hurdles to actually start listing and trading their Bitcoin future. For today's discussion, while there's a lot to be talked about regarding Bitcoin structure, a lot of opinions as to the actual value of Bitcoin, and a lot of technicality as to how Bitcoin actually works, we're going to put that all to the side today and just strictly focus on Bitcoin futures, what they are, and how they're going to trade. So currently there's been announcements by four different exchanges as to different Bitcoin futures that are going to be listed. The CFE, which is the futures exchange owned by the SIBO, has announced one. The Cantor Fitzgerald has announced that they're going to trade their own Bitcoin future over the counter. NASDAQ came out last week, said they're going to have a Bitcoin future. But for today's discussion, we'll just talk about the CME Bitcoin future, which, according to the CME, is supposed to start trading on Monday, December the 18th. In order to understand how the CME future is going to work, first we're going to take a step back and talk about how the Bitcoin itself is actually traded. Think about the Bitcoin as just a digital token that you have in your possession. And if you have this digital token that you want to sell, how would you go about doing that? Well, you would do that just like you have anything you want to sell. If you want to sell your car, you advertise that you're looking to sell your car. If you want to sell your Bitcoin, you advertise that you're looking to sell your Bitcoin. You're trying to find a buyer. Where do you do that? Well, since it's a digital token, you basically do it online. You go to different websites that have been set up and you can say, I want to sell a Bitcoin. Now, because there's all these sellers coming to the websites looking to sell their Bitcoin, that's attracted buyers, and voila, a marketplace has been born, just like your local farmer's market where you want to go and trade corn or whatever it is you want to buy at a farmer's market. You can go to a virtual marketplace online and buy or sell Bitcoin. Now, the market itself is a little bit fractured in that there's several different marketplaces across the internet where you can go ahead and exchange your Bitcoin for real money. Because of that, how do you value what the actual true value is of Bitcoin at any one time? So the CME solved this problem by creating a Bitcoin index. Essentially, they take the transaction data from across four of the largest Bitcoin marketplaces on the internet, and they average the transaction data across a certain time period. It happens to be from 3 to 4 p.m. London time every day. So, like I said, the market is fractured. There could be, trading on one exchange at one price, simultaneously trading on another exchange at another price. So what they'll do is they'll take those trades and they'll average the price to get what they call the Bitcoin reference rate. And they average the transactions and they weight them by volume so that larger transactions have more of a weight, with the idea that the larger transaction is, the more reflective it is of the actual Bitcoin's true value. So they created this Bitcoin reference rate, and then the futures product they're listing is going to trade off of this Bitcoin reference rate. So it's an index of actual Bitcoin transactions across four of the major exchanges on the web that does about 40% of the total volume each day. So they've come up with this Bitcoin reference rate, and they created a future to trade off of that. Now the future they created is going to be based on a contract value of 5 Bitcoin. For every dollar move in their Bitcoin reference rate, one futures contract will move the equivalent of $5. Now, given where Bitcoin is trading today, around $11,000, the notional value of one Bitcoin futures contract then becomes 5 times 11,000, or $55,000 per contract. So that's to say, if you bought one Bitcoin futures contract at $11,000 and it went to zero, you would be out $55,000. Now, with that said, like other index products, the CME has indicated that they're going to institute some sort of circuit breaker system. And in this case, the circuit breaker limits are going to be set at 7%, 13%, and 20% each day. So if there's a 7% move, they'll pause. If they come off of the 7% move and then go lower again, they will pause at 13% with a hard stop at 20% move each day. That being said, you could see multiple days of limit down or limit up given the volatility in this product. The CME does have a history, however, of changing limits if need be to try and encourage more trading but at the same time to try and encourage pauses to bring some sanity back into the markets. So that's where we sit right now with the Bitcoin future. Like I said, Bitcoin Cash trades 24 hours a day, 7 days a week. Bitcoin Future will trade close to that. It'll trade from 5 p.m. to 4 p.m. Chicago time, Sunday through Friday. So it closes Friday afternoon and then reopens Sunday night, like most other futures listed on the CME. Finally, of course, it's a future. We have to talk the issue of margin. As I stated, with today's values of about $11,000 per Bitcoin and a 5 Bitcoin multiplier, notional value of 55,000. CME has indicated they're going to think about maybe initial margin of about 30% of notional value, so that puts it in the neighborhood of anywhere between $15,000 and $18,000 per futures contract. But personally, given the volatility we've seen in the Bitcoin market over the last really couple months, and like all futures markets, I would highly recommend traders to be very careful with their margin use and give themselves a little bit of cushion to help sustain your trading and lessen any sort of chance that your account might be liquidated. Additionally, it wouldn't surprise me to see the FCMs on the street out there raise the margins from exchange minimums just until we see kind of how this contract trades, what the volatility is like, and what the actual risk of this contract looks like in practice. So that's what we know about the Bitcoin future at the CME right now. If you have questions, want to learn more, don't hesitate to contact me. I'm easy to get a hold of. You can hit me up on Twitter, shoot me an email, give me a call. I'd be happy to answer your questions, talk about some of the issues that might affect these Bitcoin futures, or go into more depth about how Bitcoin works if you want to talk about that. Always remember, these are my thoughts, not those of ADM Investor Services, or Archer Financial Services. Thanks, and have a great day.